Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, December 20, 2023. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Finally, we have something material to talk about. When you look at the chart, do we have the makings of a market reversal for a corrective pattern to take hold? What have we been talking about? Let's reel back the tape, go back to the last 6 or 7 videos, maybe 10 videos. We're looking for a turn between last Thursday, the Fibonacci 34, and this Thursday, the Fibonacci 55. Can you drive 55? So basically, nobody's surprised at what's going on here. Ideally, I would have loved to see him trade right up into tomorrow afternoon for the lottery ticket discussion we had last night and we had for a couple of days in the live room already. But they never or almost never give you exactly what you map out. But the fallback is and was and remains to be the turn between last Thursday and this Thursday. We're in the window. It deserves a funny how that works. Now, I'm going to have a slight intermission here for a second. At the top of the screen is a snapshot from my inbox just from the last few minutes. We have Zach. He was short. Have a nice day. Made a lot of money. That's the snapshot he sent me when you open up the email. Well done, Zach. Stay with me. There's a method to the madness. Reason this is squeezed together is because I have a lot of emails down here that you don't need to see and it's not relevant for this conversation. About Mitch, just dropped the trailer. About 12.3K. How you doing? How about TLT hitting profit target number 2? We didn't miss the market. We picked off the TLT at the bottom and the lazy swing trader had plenty of longs that made plenty of money on the way up, some a lot more in percentage terms than the stocks that only track the market or the market itself. The point here is when you look at the TLT, we basically went long the TLT at a like position down here to where the spiders were at the time. And what happened? They ripped it back up in the other direction, and the second exit was at 15% gain in the bond market. That's notwithstanding all the other stocks that were long at the time. Now we have 7 open short positions in the lazy swing trader. 2 are slightly out of the money, 5 are in the money. This is the way it works. The market shifts. You're supposed to go short at the highs. You're supposed to go long when the market sells off. And this is how it's done via the algorithm that underlies the lazy swing trader. Let's get back to the spiders, get back to the market, get back to the overall what the heck's going on. We're going to meld some of it together today because we had a couple of canaries in the coal mine out there. Talked about them over the last day or two. Canary in the coal mine, maybe the transports. Canary in the coal mine, maybe the SMH as it relates to the tech sector. We had Apple waffling over the last day or so. Market doesn't go in a straight line forever. Pullbacks are always going to come. I was pounding the table in the live room on this topic over the last couple of days. It's just a matter of from when and where. Tried to nail the when 2 times. Tried to nail the when in terms of the ideal nirvana situation. This is what we talked about in the live room. That was tomorrow, trading up into tomorrow. Well, that didn't happen already because if they trade up into tomorrow after today, it's a different type of tape. However, the second thing was we're in that window anyway between last Thursday and this Thursday. Talked about it a dozen times in here. Time is more important than price. Just when it looks like she can't ever possibly come down again, the market makes a turn. Mrs. Market must, and I repeat must, with a capital M, make as many traders and investors look like fools as much of the time as possible. There has to be rug pull events. There has to be pies in the face. Traders have to be wrong. There has to be the last one in. There have to be FOMO situations in both directions. Each and every time. Don't fall victim to the FOMO. We have these discussions in the live room just about every single day. I talk traders off the ledge just about every single day. We go over all the reasons why. I point them out. I give you all the anecdotes. learn from my experiences. You learn from your mistakes. When you go to the school of hard knocks and you have a graduate degree, you learn not to do the things that most people get sucked into doing around the markets. Think of the markets as opposite land of what your emotions want to tell you to do. Let's talk about where they're going, what's the scoop. So just from a visual perspective, we could see a couple of things that are important. You have this pivot low down here, 467.43. That prevented the market from going any lower on that day at that price. So Mrs. Market thought that price was important. So what we do know going forward is if she gets below that price, starts trading below their intraday, closing candles below there, starting obviously with a very short term and then leading into, for example, hourly closes, half a day close, a daily close, then what does it do? It opens the door for what? The next big time thing in the sequence, which is what? The breakup candle low, the next big thing in the sequence. The low happens to be 464.12. So there's two numbers on the downside that will produce under normal garden variety conditions that bull-bear battle situation. If you gap below that low from the other day, for example, tomorrow or sometime next week, then that immediately opens the door for the next thing in the sequence, the breakup candle low. Write this stuff down, put it on a sticky note, laminate it. Why am I bringing up CAT? Because I want to prove a point, and then I'm going to prove the point for the second time in a row using the spiders. We'll come back to the spiders. Again, there's a method to the madness. You have to stay with me on this stuff. This was a swing trade that came right out of the lazy swing trader system this morning. 297.45. CAT, the high of day, happens to be what? Happens to be 298.27. Finished on low of day. Already in the trade, up about 2.67%. That's in the first trading day. But here's the situation. CAT was making a new high. What were they doing? Spiking the high and pulling it back down in the other direction? How does the system know what number is above the former high? I'll let you scratch your head on that one for a while. Remember, there's a method to the madness. We're going to start right smack in the middle of Inside the Numbers commentary, 1043. Still heading toward 475.80, which is a target and overhead resistance. I always give both sides. What happens if they start pushing above, closing candles above? That's how you know that they're going to the next overhead resistance or important place. However, the first stage of overhead resistance is they stop going up. They stop going in the direction they're going. The second phase is they either eat time off the clock, do the hang around for a cup of coffee thing, or they just retreat back in the other direction. 475.80. We'll just stick on the daily chart. 475.80. What was high of day? 475.90. Finished on low of day, basically. How you doing? Now you know why I brought up that other stuff before. That number was given out Inside the Numbers today. It was given out in the live room today. A dime within high of day today. Pause the video. Read the notes, go back to the chart to double check the work. It's all in here. We had 474 as our early pivot. 5-minute chart, right of the vertical, today's activity. 474 was our early pivot. Above it, she's bullish. Go to the next place. She went to the next place. Below it, she's not bullish. There were other places, but in the afternoon, it was just somewhat of a waterfall decline. I'll repeat what I tell the traders in the live room each and every day as I'm getting off the air after the morning session, which is quote unquote, not air quotes, quote unquote, every single day. Don't do stupid stuff in the afternoon. The market's open all day. It's like a store. You get what you need, you get in, you get out, you go on to the next thing. The main money-making opportunity in the market is in the morning session. That's why we're open during the main money-making opportunity, not in the afternoon. It's a different kind of market in the afternoon. I can't say that enough. I say that to the live room traders all the time. You have two different faces on the market. The morning market, the afternoon market. And one is more predictable than the next. Guess which one? Pause the video. Oh, by the way, here's a service announcement. Inside the Numbers in the live room will be closed this Friday. We're taking a vacation day. The last trading day before Christmas come hell or high water, I'm taking a vacation day. Again, pause the video, read the notes, go back to the chart to double check the work. It's all in here from the pivot and go. Same stuff each and every day. Above the pivot, the target was what? 475.80. It's all in here. We had traders ride it up. We had traders ride it down. We've got something for everybody. What about stocks on the move? Only one hit its entry objective today. It was Big Mo. We'll take a look at that chart real quick. The other three did not. Therefore, they're off the board. They're classified as no trades. Here you got Big Mo, Altria, getting a haircut at the opening bell. Opened right on the first number. Went pretty fast to the second number. Bounced at the second number. They gave you a little bit of a situational trade there. Only bouncing to 41.09 and then coming back to run a test of the number. Leaking with the market into the end of the day. No harm, no foul. They just didn't give you any kind of rip-roar and rocket ride anywhere in Big Mo. But you could see how the numbers worked. What's going on over in Camp IWM? We had 201.10 yesterday. We had 201.10 again today. And guess what? They can't get through it. Finished near the lows of the day. Doesn't mean the overall rally is over. We're looking for a pullback. We were looking for a turn. As it stands today, taking the market at face value, we got a turn, the semblance of a turn. Unless it's a big-time fake-out operation, we got some kind of a turn from resistance in that time window we were talking about. This is how the market works. Transports, canary in the coal mine. They were getting smoked today, rallied right back to close the gap or come very close, and then finished on low of day. And if you notice where they are as it relates to other markets, they're ahead of the power curve, meaning they're leading to the downside. My second favorite market leading indicator has relative weakness against the market. That bodes well for more downside from a canary in the coal mine perspective. What's the next thing up for Team Transports? Fill the gap over here. What about the Q people? How about another reversal day with volume? Not tremendous volume, but good volume. Finished on low of day. Now, a lot of times when you finish on the low of day, you get some kind of a bounce back situation going the next day. So don't be surprised if that happens. Look where the volume is and compared to the last few days. It's not tremendous. It's not an outlier, but it's not lighter volume. It's heavier than the way up the last couple of days. So at least we have that. How about the financials? You could see how this is going. Everything's coming back to pay a visit where? Toward home base. They don't have to get there. Maybe they go through home base. Home base is 20-period moving average. The market doesn't like to get too far from home base. Where have you heard that before? Was anybody not expecting the market to pull back? You can post that under the video. And while you're at it, post any successes on the short trade under the video from the live room and or inside the numbers and or the time zone. SMH, pretty darn good proxy for the tech space as a whole, down almost 3% today. Leading indicator of the tech space, canary of the tech space, finished on low of day. This is a bona fide reversal situation on the daily chart. We talked about also, I believe yesterday, was just because the trend is up and the trend will remain up until they break the trend, but they're going to reverse from somewhere. So from a shorter term perspective, you look at other charts, here's a 2-hour chart. Where's the trend? Well, it changed, right? How about a 4-hour chart? It's right into that 20-period moving average, about to change. Hourly chart, changed. You see how this works? Things morph from a shorter time frame onto larger time frames. Stick around. You'll learn a lot of stuff if you just pay attention and keep your sticky notes handy. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.